Hello, everyone. My guest today is Will Shaw. He's the co-founder of BetterAgency, the first sales-driven AMS and the industry's top CRM for independent insurance agencies. They're on a mission to help agents issue $1 billion in new business premiums by 2024. He's an ex-professional athlete, and his playing field is now the tech and software space. Will, you ready to take us to the top?
Yeah, let's do it.
What sport did you play?
I played football, so I played with the Steelers and the Eagles.
Oh, very cool. Which one did you enjoy more?
The Eagles, because I lasted longer there.
Good answer. Good answer. All right. So talk to me about BetterAgency a bit here. So I obviously love niche specific businesses. We've had you on before. I'd love to understand sort of growth from then. Are you still the same product, or have you released something major over the past 2 years?
Yeah, so we've kind of grown a lot. Yeah, so I know we talked previously. I fell into the insurance niche because I was customizing tools like Infusionsoft, HubSpot, Salesforce for the insurance space. And what we found was, hey, we were using 6, 7, 8 different platforms to do the same thing. Wasn't working through antiquated systems and bad APIs because nobody's been really focused on the insurance industry. So right at the end of 2019, we decided to launch BetterAgency, which was the first CRM specifically for independent insurance agents. And throughout that time, we've really grown doing that. And then we recently just launched our newest feature, which is what we call the sales-driven AMS. So that's actually connecting directly with policy downloads from the carriers. That's been something we've been working on for almost a year now. And it's really allowing us to offer a one true system to insurance agents instead of them having to use multiple different platforms.
And you used to be, did you have a rebrand? You were called Marketing Connected, I think, previously, right?
Yeah, so that was a previous company that I was kind of using as a placeholder as I was transitioning out of doing custom implementations and into what we launched at BetterAgency.
I see. Got it. Okay, cool. But same story there in terms of
Right.
that was the baby version. You've now since changed, matured, etc.
Yep, exactly.
Okay, very cool. So let's jump into this a bit. On the CRM tool today, I think when you last came back on, I guess this would have been back again 2019. You had just broken, I think, 100 customers, and you were charging at that point, I think, about $300 a month. Still the same price point?
Yeah, so our price point's gone up. We're a little over 400 now on our average customer. We've been able to add some different upsell opportunities. So we try to get people in around the $200 to $250 mark.
Yep.
And now we're getting our average customer a little over 400, and we think we can get to 500 over the next 12 months.
And what's driving your ability to get higher price points? Are they buying more seats originally? Are you upselling more features on day one? What's the story there?
Both. More seats coming on. So as we're able to help solve more problems, we get more of the team on board to our platform. And the second thing is just adding more features. One of the things we've been passionate about is trying to achieve that kind of net negative revenue churn. And that's been kind of helped drive our growth.
Where are you now on that?
So I think when we spoke in 2019, we actually just launched at the end of 2019, October, November timeframe. So right now we're somewhere around 260 customers, and we just broke the 1 million ARR mark.
Oh, hey, congrats, man! That's exciting.
Thanks, I appreciate it.
Big deal. Bootstrapped or you raised?
So we bootstrapped to this point. We are tomorrow actually closing our first round. So we've got to this far bootstrapped, and so we just are closing on our first round tomorrow.
We love that. So you guys listen to the podcast, you get breaking news before it happens. Will, how much you guys end up raising?
So we're going to raise a total of 2.1 million. It's going to be at a $15 million post.
Yep.
And we're pretty excited about that. So yeah, we were able to bootstrap to this point, and so that made fundraising pretty easy, and it just made sense for where we were at.
15.2 posts. So, I mean, that's essentially 13 pre, right? Or about 13x your ARR. I mean, does that feel fair to you, or do you feel like it could have driven it higher or lower? What do you think?
We could have totally have driven it higher. I mean, the market, you know better than I do, the market's pretty frothy right now, and we could have driven higher, but my biggest problem with fundraising was telling people no. And the reason being is we wanted to be as strategic as possible. We were in a position where we had bootstrapped this. We didn't necessarily have to raise money. The only money we're burning is some of the original money we put in at this point or saved along the way, and we're using that to drive some marketing. So we really wanted to raise money to start bringing our development talent, our product team in-house, because that's been outsourced previously, and to grow our sales and marketing team and what we're doing there. So we wanted to be as strategic as possible. So that meant staying a little bit away from the VCs because we're not going the traditional fundraising route and going more towards angels, which is a little bit different valuation standpoint.
So how many people are participating in the 2.1 raise?
So we probably could have got away with doing it with 2, but we ended up getting we have about 50% from our lead investor, and the other 50% is divided between insurance specific strategic investors, and then the other half of that would be through strategic other verticalized CRM founders or some people that we know that have gone through whether it was Infusionsoft's fundraising or different fundraising events here locally in Arizona.
That's very cool. Is Clayton putting any money in?
No, he's not, but I have had some conversations with him.
Nice, nice. And then the lead that put in about 40-50%, did they set the terms, or did you let the whole sort of, like, was that a traditional VC or just a wealthy individual?
So that was an angel here locally.
Okay.
So we let them set the terms. We thought it was more than fair for playing with the, staying out of the VC realm and coming in, staying with more angels.
Priced round though, right? Not a convertible note.
Yep, it's a price round.
Okay. And so you mentioned burn, right? So before this raise, like in June, how much capital will you burn?
About 10 or 12K.
So not a ton. Okay. I mean, this isn't that bad. That's, negative 10 to 12% EBITDA margin is not horrible in SaaS. And what's growth look like? So I mean, if you're at $1 million run rate today, where were you exactly a year ago? Do you remember?
Oh man, I could look it up, but my guess is we were at this time last year, we were at probably somewhere between 25 to maybe 30K MRR.
So you were flat then, because that's what you told me you were at in 2019 or late 2019.
Yeah. So, well, when we talked to 2019, that was more about where we were expecting to get. We didn't make we had some commitments that were helping us get there, but we didn't really bring in our first dollar until I think November of 2019.
I see. Got it. So you're pre-revenue up until that point.
Yeah. So when we launched, because we bootstrapped it, we pre-sold quite a bit working with people. And so that's kind of what we were expecting. We got to that number. It just took us about 6 months longer than we thought.
I see. Got it. Okay. So got it. $0 of revenue in July 2019, about $30,000 a month in July 2020. And now today past $1 million run rate.
Correct. And then we're growing at an average about 10% a month. And we've kind of been consistent about that since about August of 2020.
Mm-hmm. Where's the growth coming from? How are you signing up new people? When you came on last, you said affiliates were a key growth driver for you.
Yeah. So about 30% are through our paid strategy, and about 70% are coming through either referrals or organic. So we spent a lot of time focused on the blog from the start, and we're starting to see dividends from that now. A lot of it is customer referrals, and then we have some still coming in from referral partners.
On the paid strategy, how much did you spend on paid ads in June this month?
So that would be almost all of our paid budget outside of SEO. So if we spend 12 grand on marketing in June, about probably close to 10K of that was specifically to paid. 9 to 10,000 probably specifically to paid through Facebook or Google.
Facebook, Google, interesting. And how many new customers or leads will you get on 10K of spend?
So on 10K in spend, we'll get about 25 net new customers. So we'll get a bunch of trials and we convert about 70% of those trials. So that'll equate to about 25 new paying customers.
That's great. What do you have to get a trial to do to make sure they convert to paid?
Yeah, so there's a kind of key components that we look at. One is making sure that they engage with us. So kind of the first way we weed somebody out is if they don't engage with our onboarding team, we look at a trial as an opportunity for a paying customer. So we immediately start reaching out and trying to onboard. They don't engage with us and they have no usage, we'll preemptively cancel their account and let them know to try to re-engage them. So that's the first thing we do. But the main key things we're looking at is getting them started on our onboarding process. So we invest heavily on onboarding.
You charge for it? Is there a setup fee?
What's that? No, we don't charge a setup fee. I know everybody's trying to reduce our customer acquisition cost. We're trying to increase it heavily through increased onboarding. Our view is if we spend more on onboarding, we can increase our LTV and we can spend more to acquire our customers. So we go through a pretty heavy onboarding. We try to connect with them, and our goal is to get them to either import data, connect to their lead sources, get their sales team in there. There's about four to six key objectives that we want to accomplish in a 30-day period.
Mm-hmm. Yeah, it's interesting. It'll be interesting to see how that experiment pans out. I remember having Clayton on many years ago, and he told me how, Infusionsoft was, when it was still Infusionsoft, now it's Keep. When they were seeing 8% monthly churn, he said finally the way they tackled it is they just charged a setup fee of about $300, which was equivalent to an average of about 9 months of the first year ACV on the SaaS side of business. Yeah. And by charging that, churn dropped and then down to about 2%. But your top of funnel was smaller because not as many people would pay the setup fee. Right. So it's a yin and a yang.
Yep. Yeah, for sure. Yeah, you can reduce the amount of people come in, lower churn, but again, it's just a change of the funnel.
70% referrals or the organic or blog. Talk to me about your referral program. So how many affiliates made at least $1 from you in terms of payouts in June?
About 5.
Okay, so this is a very concentrated affiliate program.
Yeah, very concentrated. It's very small. I mean, we have some good affiliates, but we haven't gone large with it yet.
Yeah. And what are your expenses each month on the affiliate payouts you're paying? Like, are we talking 10 grand a month, 30 grand a month, something else?
No, it's still pretty small. We're paying out an average about 6 to 7 grand a month right now.
Okay, got it. So 5 affiliates make somewhere between maybe $1,000 and $2,000 each per month.
Yeah, I think one's probably taking the majority, and the other three are making a couple grand here or there.
Yeah, interesting. Okay, and what is that? What are you paying them? Is it 30% of the trial or the customers they bring in, or something like that?
Yeah, so I think it's a tiered structure based on how many you're bringing in. I think it starts at 20%, and then it'll go up to 30% if you're bringing in enough.
30% in perpetuity, like per month if they stay active?
Yep.
Oh, wow. In perpetuity. Interesting. Do you ever worry about in the future? I mean, basically, if a bunch of your revenues come from affiliates, your margin's never going to be higher than 70% because of the payment out to them.
Correct. Yeah. So what we do is it's on the base application that they bring in, and then we kind of take on charge of upgrading them. And so we don't pay out the upgrades to the affiliates.
I see. So as a percent of the total ACV of the account, the affiliate payout drops over time because you're upselling them.
Right, because we're upselling. Yeah.
I see. Let's talk about upselling. When you last came on, I think you said churn was about 36%, expansion was 36%, so 100% net dollar retention. Where are those numbers today?
Yeah, so a little bit better. So we're hovering around 2% monthly churn, and I believe on an annual basis, correct my math, what is that, about 85?
24.
Yeah. So that's our current, and then we're upselling at almost not. What is our upsell rate? I believe we're somewhere a little bit higher than 100%. I think we're between 105 and 110%. Based off our upsell, but our goal is to get that to 120.
Your net dollar retention.
Yes.
Got it. So if net dollar retention is 105 and you first have to make up a 24% churn whole, your expansion is about 30% year over year on a historical account.
That sounds about right based off the last numbers I looked at.
What are you upselling? Is it mainly number of seats, or is it more feature-based or utility-based upselling?
So it's a little bit of both. A lot of it originally was user-based or user seats, and we just started doing that probably at the end of 2020. And then with the release of our new features that have rolled out back in April and May, and what we have coming in this later, we're getting closer to a 50-50 split, and we're seeing the larger increase in cost because as people start adding more features, we also see along with that the seats that come along. So somebody that just upgrades seats, they just upgrade seats. But somebody that's upgrading features generally is upgrading seats as well.
Mm-hmm. I understand the blog organic versus your affiliates versus your paid spend on Facebook and Google. They're all going to have different sort of CAC profiles. So they're different channels. Let's just focus on the pure paid stuff for a second. What are you willing to spend to get a new $400 a month customer?
So we're willing to spend, I mean, I break this down in our marketing CAC as well as our all-in customer acquisition cost, including our sales rep, including our onboarding and things like that. So our LTV right now is somewhere ranging between, again, it's a guess because we're a young company. So this ranges pretty significantly, but I would say we're steady between 12 to 14K in our LTV. Mm-hmm. So right now we're willing to spend upwards of $1,500 to get all in to get a customer because we can keep that kind of 10-to-1 ratio. And that's what I was saying before. We're investing more into onboarding because we think we can get our all-in customer acquisition costs actually up, which is one of our goals, get it up with our onboarding to around 2,000. We think that can get us to a closer to a 20,000 LTV.
Yeah, no, it's interesting. I mean, if you can spend $1,500-$1,600 to get the customer, it's $400 a month. You still have a 4 or 5 month payback period. That's very manageable.
Right. We're not trying to push our CAC down. We're actually trying to push it up because if we can increase our LTV, then we could just outspend any competition.
Yeah, I mean, the only time where that math breaks down is if you're able to increase your CAC, so spend more on getting people more addicted early on, and you drive your lifetime value up to 20 grand. But if it takes you 6 years or 10 years to capture the 20 grand and your payback period is really long, it can be a cash gap issue. But sounds like from these numbers, you don't have any of those issues.
Not yet, but I'll loop back around with you and let you know down the road.
Yeah, no, I mean, congrats. I mean, all these things, I mean, it looks like you're moving the needle like in the right direction, all these things. And this is a tough space you're in now. It's obviously niche and insurance based, but it's still exciting. Will you stick with insurance for a while, or do you think you'll expand to other markets?
No, I think we're going to be hyper focused on being a vertical based SaaS company. It's an interesting market. The more time we spend in here, we figure we can spend more problems or solve more problems. Mm-hmm. There's a lot of things we run into where companies have been in this space since the 80s and 90s, and a lot of them haven't. A lot of our competition isn't even necessarily on the cloud. So we feel like we can be a real disruptor in the industry.
And what's your team size today? How many folks?
So we're at 16, and our goal is to be at about 20 to 25 by the end of the year.
How many of the 16 are engineers?
6.
And how many sales reps with a quota?
1.
Oh, just 1. Interesting. What's their quota target?
So their quota target is 20 to 25. It's a tier, but on target earnings should be about 20 sales a month, which will equate to driving about $500,000 in new business at the end of the year. And right now we're exceeding that a little bit and getting closer to 25.
Got it. So that one sales rep, if they do close $500,000 of new ARR each year, what can they earn? What's their base plus commission total?
Yeah, so their on target earnings would be about assuming they're going to close about 500,000, 500 to 550K. Their on target earnings is going to be about 150 to 160.
Okay, that math works. That's profit. That's a profitable sales rep. That's great. Very, very cool. That makes a lot of sense. All right. I guess last question here. Talk to me about equity. Were you the sole founder here? Like, how much equity do you still own post this raise?
Yeah, no, actually, great question. So I actually have 3 other co-founders that are still on the company. We founded this as a group. So between all of us, we still control close to 80% equity.
Even after this 2.1 million raise?
Correct. Yeah.
Okay.
We have a pretty aggressive employee stock option program too, but we control about it almost, I think it's about between 75 and 80% without looking at the cap table.
For the whole team, the founders.
Yeah, for me and the 3 other co-founders. Yeah.
How big is the stock option plan for the employees? At least the allocation.
Somewhere between about 5 to 7%.
Okay, that seems like totally fair. Are the new investors going to require you to increase that number or no?
We did as part of that round. We increased it a little bit more, anyways, just because we want to. We're a small team and we want to keep kind of that family atmosphere, and we like being able to be open about that stuff.
75% owned by the 4 co-founders. The new raise, which you're announcing now, to $2 million, they're going to own about 20%, and then the employees own the other 5 stock option pool.
You got it.
That's very cool. Great setup, man. Hey, congrats. Let's wrap up here with the famous 5. Number 1, favorite business book.
Favorite business book. Let's go with.
I just say last time. I wonder what you said last time. You said the upside of stress.
Let's go with Play Bigger this time.
Play Bigger.
Category creation and dominating a category.
Nice. Number 2, is there a CEO you're following or studying?
I wouldn't. At this time, I would say more than a CEO that I'm following study is there's a couple people I follow, a couple authors that I actually follow on Twitter. Nasib Taleb, who wrote The Black Swan and Anti-Fragile, who I'm a big time follower of.
Number 3, what's your favorite online tool for building better agency?
Well, I'm not a developer, so for me, it's probably I use Notion as my number 1 tool. So all of my personal notes, all my work notes, I keep track of everything is in Notion. My whole life and probably our whole business is in Notion.
Number 4, how many hours of sleep do you get every night?
8 hours.
8. And situation, married, single, kids?
Married with a 1-year-old daughter.
Oh wow, that's a development from since our last call.
Yeah, that's a big time development.
How old are you, Will?
What was that?
How old are you?
30.
All right, last question. What's something you wish you knew when you were 20?
Something I wish I knew when I was 20. That
football years, I imagine.
I really wish I would have had a backup plan after football. I struggled figuring out transitioning from football into what I was going to do. And I was that prototypical athlete that did not have that backup plan. I wish I would have listened to everybody trying to tell me that.
Yeah, you see Brady building his own brand as he gets past 40 and 45 and 50. Interesting. Hey, actually, I have to end on this question. Who has a better record this year, the Eagles or the Washington football team?
Oh man, the loyalty in me wants to say the Eagles, but I'm a Ryan Fitzpatrick believer. We went to the same high school. I've known him for years, so I'll go with the Redskins.
And plus the beards, we got the beards going on. That's
yeah. Epic beard over there. Do
they take the East again, or no? You think Cowboys or Giants sneak in?
I'm kind of high on the Giants, but the Cowboys, you always think are going to be good, but they never pull it off. So it's like they're like the team that could bust, but they could actually be good. They have on paper they look great, but
if Dak
I would roll with Washington just because I can't trust the Cowboys.
Yep. Guys, there you have it. BetterAgency.com. Again, they are backing insurance providers, helping them with a great CRM tool. He's going to stay focused on that niche. They were doing $30,000 a month last year at this time, now doing over $85,000 a month, past $1 million run rate. They had bootstrapped to that point, serving 260 insurance agencies to date. They're only burning about $12,000 per month as they scale and are announcing, they just now say basically $2.1 million raise at a $15 million post-money valuation. The founder still owns 75-80% of the business. New investors own, call it 15-20%, and employees have, call it 5 to 7% of the business. 16 folks on the team right now as they look to scale net dollar retention over 100%. All good. Will, thanks for taking us to the top.
Yeah, I appreciate your time.
One more thing before you go. We have a brand new show every Thursday at 1 p.m. Central. It's called Shark Tank for SaaS. We call it Deal or Bust. One founder comes on, 3 hungry buyers. They try and do a deal live, and the founder shares back-end dashboards, their expenses, their revenue, ARPU, CAC, LTV, you name it, they share it. And the buyers try and make a deal live. It is fun to watch every Thursday, 1 p.m. Central. Additionally, remember, these recorded founder interviews go live. We release them here on YouTube every day at 2 p.m. Central. To make sure you don't miss any of that, make sure you click the subscribe button below here on YouTube, the big red button, and then click the little bell notification to make sure you get notifications when we do go live. I wouldn't want you to miss breaking news in the SaaS world, whether it's an acquisition, a big fundraise, a big sale, a big profitability statement, or something else. I don't want you to miss it. Additionally, if you want to take this conversation deeper and further, we have by far the largest private Slack community for B2B SaaS founders. You want to get in there. We've probably talked about your tool if you're running a company or your firm if you're investing. You can go in there and quickly search and see what people are saying. Sign up for that at nathanlatka.com/Slack. In the meantime, I'm hanging out with you here on YouTube. I'll be in the comments for the next 30 minutes. Feel free to let me know what you thought about this episode. And if you enjoyed it, click the thumbs up. We get a lot of haters that are mad at how aggressive I am on these shows, but I do it so that we can all learn. We have to counter those people. We got to push them away. Click the thumbs up below to counter them and know that I appreciate your guys' support. All right, I'll be in the comments. See ya.